Welcome to this video on climate scenario analysis, focusing on physical risks and opportunities. This is a framework for corporate sustainability professionals and financial sector stakeholders. The agenda for this video covers 11 key areas, including TCFD framework, physical climate hazards, scenario analysis, risk assessment, adaptation strategies, and implementation frameworks. We begin with an introduction and context, distinguishing climate from weather, and understanding why robust scenario analysis is vital for business resilience. Climate refers to long-term patterns over decades, like average temperature. Weather describes short-term atmospheric conditions, such as today's rain or temperature. This distinction is crucial for climate risk assessment. The IPCC-AR6 highlights key climate changes in Southeast Asia, including increased frequency of extreme weather and rising sea levels. Climate change impacts are accelerating, urging action to stabilize warming at 1.5 degrees Celsius. Key business drivers for climate risk assessment include regulatory pressure, financial sector expectations, market and technology trends, and supply chain considerations. These drivers emphasize risk, resilience, opportunity, and competitive advantage. Next, we overview the TCFD framework, the Task Force on Climate-Related Financial Disclosures. It focuses on how climate change impacts business financial resilience. The TCFD framework is built on 4 pillars: governance, strategy, risk management, and metrics and targets, providing a structure for organizations to disclose climate-related information. TCFD covers physical, transition risks, and opportunities. The financial focus includes impacts on revenue, expenditure, and asset valuation. Time horizons range from near-term, 2030, to long-term, 2080 to 2100. We now explore physical climate hazards, including definitions, acute versus chronic types, and examples relevant to businesses in Southeast Asia, focusing on extreme heat, flooding, and storms. Physical climate hazards are either acute, meaning event-driven with increasing severity, or chronic, which are long-term shifts in climate patterns. Both increase in frequency and severity due to climate change. Regional impacts in Southeast Asia include higher flood levels, stronger tropical cyclones, and increased precipitation. We must raise risk thresholds through climate adaptation to move from unacceptable to acceptable risk. Section 4 focuses on scenario analysis methodology and representative concentration pathways, or RCPs. We will examine climate pathways, scenarios, and time horizons. Climate scenario analysis often uses 2 key frameworks: RCPs and SSPs. RCPs, or representative concentration pathways, describe different levels of greenhouse gas concentrations and the resulting warming outcomes. For example, RCP 2.6 represents a strong mitigation pathway, while RCP 8.5 reflects a high emissions, no action future. SSPs, or shared socioeconomic pathways, complement RCPs by describing possible futures based on societal trends, including population growth, economic development, technology, and global cooperation. They range from SSP 1, a sustainable world, to SSP 5, a fossil fuel-intensive future. Together, RCPs and SSPs allow us to model how climate impacts evolve under both physical and socioeconomic conditions, helping policymakers and businesses plan resilient strategies. The physical risk assessment process is a phased approach, moving from qualitative screening to detailed quantitative analysis of financial impacts on assets and operations. Phase 1 involves screening and qualitative assessment. This includes defining the physical domain, baseline hazard analysis, selecting appropriate RCP scenarios, and developing climate projections. Phase 2 is quantitative risk and financial assessment. This involves identifying financial impact categories, like value at risk, and operational disruption, using quantification methods to translate climate impacts into financial metrics. Adaptation strategies and response measures fall into 5 categories: enabling, social, management, green, and physical responses. Systematic evaluation of these measures is necessary to avoid maladaptation considerations. The implementation framework emphasizes a journey mindset and portfolio versus asset-specific approaches. Continuous updates, regional focus, and leveraging data sources are key to achieving climate resilience. Thank you for watching this video. If you wish to explore climate risk assessment, scenario analysis, ESG reporting, or other related topics, please connect with Jay Shah using the contact information provided.